Hi, welcome to the Market Alert for Thursday, the 23rd of August 2018. So yesterday in the pound, you can see this starting to move lower again, having come back up to the 20 bar average, and we've seen what's happened before when this market has done this. The overnight market is currently below it, and it looks like we could be resuming the south side, as it were, of this market. So what we'll do is we'll start off by drawing in the 76% retracement. This is going to be a crucial area, 127.27, and all of the mainstream press as well now putting out news, panic and hysteria about what happens if we don't have a Brexit deal as well. So this is all going to come back, and certainly after the recess, which I think is shortly, could be next week, whatever. Anyway, the media are getting their teeth into a no deal Brexit, whipping up a frenzy, so that's going to weigh on the pound. So this bounce that we've seen, this dead cat bounce, is likely to see prices moving to the downside and resuming that trend to the downside as well. So let's have a look at yesterday's market. Price is trading down to the DP level, no selling at this level. Market puts in the 76% retracement, and we trade up to the high, and then the market just becomes sideways until overnight. We see the market break the DP level, also the psychological level there of 128, sorry, that's 129, and then through the 200 bar moving average and down to yesterday's low. So a break there. We'll see prices head down to the S2 and S3. Prices head down and touch the S3, the market will stop. Simple as that. That's what it does. And news for today, what have we got? Anything in red? Nope. There's no point in reading all of that and wasting yours or my time on that one. Meanwhile, in the Dow, yesterday we saw this market struggling, traded back up to the 76%. That was the high for the day, and now it's starting to look slightly lower. If this market's going to move higher, we're going to have to see new professional buying driving through the 25,888 in order to do so and head back towards the all-time high that we see there. So still could be done, but at the moment there's no sort of excuse, as it were, to drive the market up. So we'll keep an eye on the 25,694, the 76% retracement, and should prices start to move higher, watch out for the 25,888 level. So yesterday in the Dow, let's have a look. We see in the pre-market session, market finding support, closing back, it traded through the 200 bar moving average, closed back below, traded down to the DP, found support at the psychological level here of 25,750, came back above the 200 bar moving average, having gone through both of these, and you can see the volume there as well picked up, and then it was straight up ready for the main event. When we got to the main event, there wasn't a lot to report. So the market trading at the R1, 80% of the time the market will stop at this level, and not only that, but it came back and had a look at this on several occasions as well. I'll just show you this, you can see there, and in the way here we've got the R1 level. You've also got from here to here 76%, 76% as well, and then eventually the market breaks down to the downside, and we see the market going through the 200 bar moving average. Then it returns back through, but then it's met with selling, some buying pressure, then selling, and then move lower. And on the overnight, whoops, turn that off. And then on the overnight, you can see that prices are being pushed down, And if we look at what's going on here, just to get an idea, you can see we've broken the 26,000 level. Well, I say we've broken it, we broke it, traded to yesterday's low, and we've come back at the moment and then back again. And also what you want to keep in mind, I'll just narrow this down for you, any move to the upside, watch the 200 bar moving average and DP, because at the moment we're actually below it. So the last thing is to watch the S1 as well. If prices come down to here, they're likely to find support and then attempt to move to back to the upside as well for this market. And then finally in Bitcoin, after yesterday's manipulation where they moved prices up to the 200 bar moving average, prices then fell sharply, which you'll see here. This was at yesterday afternoon, early evening, as prices were hammered to the downside, and the reason for this was that the SEC has rejected 9 Bitcoin ETF applications from ProShare, Direxon and Granite shares. So that's why this is being put under pressure, and now it's trying to bounce back at the moment. But we'll have to wait and see. Watch that 200 bar average on the intraday. In the 4 hour it's still there, should there be any bounce to the upside. But in the daily chart, for me, again, we're still taking out the manipulation the other night. We're still looking to the downside, and take a lot to reverse this and send it to the downside, especially with the rejection of the applications by the SEC. It might try and hold the market over a few days, but eventually it will move to the downside. Okay, that will do it for this one. If there's anything to report, I will let you know, but other than that, as ever, thanks for watching. See you in the next one.